Hello, welcome again to a Hot Takes with Kari and Keelan. It is episode 22. I am Kari Rae Davis with Kari Sells the City and Keller Williams.
And I'm Keelan Harvey with the Harvey Home Team and Highlands Residential.
Well, Keelan, I'm excited to jump into a topic we touched on last time. We talked about construction loans last time, and this time I want to talk about those rehab loans that we touched on. So
Yeah,
I'd love to jump right into that.
absolutely. Rehab loans. So you can do mandatory fixes or desired fixes. So if you find a home and the world's your oyster as far as any renovations that you want to do. Of course, the numbers have to work out, but it's really very similar to a normal loan.
Okay.
As a first-time home buyer, you can do as little as 3% down. If you're not a first-time home buyer, 5% down minimum. Yeah, FHA has a version. There's a couple versions of this 203K, so on and so forth, home style. But just to kind of brush a large brush stroke over everything. It closes the same way as a normal loan. The difference is you have a contractor involved, and
Okay.
then a contractor gives you bid on the work that needs to be done for the home. And then we submit those bids to an appraiser, and then the appraiser gives us an appraisal that is subject to your renovations. And you can go crazy. You can add rooms, you can do whatever you want to do. It could be minor, it could be, huge. Whatever you want to do, it could be as little as like we want a new kitchen and bathrooms, or it could be as crazy as adding bedrooms in. Like, obviously, you got to jump through the hoops, and we would need to get the appropriate talk to the city, get the appropriate I can't think of the word
Permit?
right.
Maybe
Permits.
right
Thank you.
permits? Yeah.
Yes, permits. I don't know why permits eluding me, but yeah, the
Well,
correct
everything needs a permit. Not everything, but if you're going to start moving walls, adding plumbing, adding electrical, changing major things, then you definitely want to look at the permitting for it.
Yeah, FHA, if it's over 30,000, they want to have a HUD consultant come in. So if you go FHA, there's a couple more hoops to jump through, but there's always a couple more hoops to jump through with Govy loans. So
Right.
not the end of the world. But yeah, the world's your oyster. You can do whatever you want to do. Once we get to that place of we got the appraisal back, everything matches up, we close it like a normal loan, like a 30-day close on a normal loan, and then you have technically 6 months with FHA and a year for a conventional loan to finish the project. I was talking to Evan. He's amazing, our head of construction guy. Shout out to Evan. And he's saying oftentimes they go over a lot. I've had them go
They go,
over
wait a second, they go over time wise?
time wise, which is
Okay.
not that big of a deal. He said it happens frequently. So, like on an FHA, either if you have a big renovation, you're not going to do it in 6 months. So
Right.
there's not like any fees or anything for that. It goes over, and it is what it is. As long as we're moving forward in the right direction, there's no issues. Obviously, we're getting 2 years into a project. It's a problem. They're gonna come and want to reclaim, foreclose on the property because, we're not going anywhere.
Right.
But nobody wants to do that. If you're getting into a rehab loan, you want to get your house done as soon as possible, right?
Well, and
Um,
I've got a question about the contractors. So, when you're going through this process, you find a home, you bring your contractor in, they give you a bid. Do these contractors have requirements of being licensed and bonded? Is that part of the requirement for them to be accepted for this process?
Yes, great question. They have to go through a vetting process with us, which really comes down to just that. They have to have some experience. I've been pretty surprised. I've had some pretty rookie contractors come in and get approved, no problem. And our approval process is quick, like
Okay.
24 to 48 hours. But they definitely have to be licensed, bonded, insured. They have to be an actual contractor. A lot of contractors try to be the contractor that's doing their own job. That doesn't work. You need to have a separate contractor besides themselves, and
Okay.
I've seen that a lot actually. But yeah, you can't do your own project. You have to have a contractor do it besides you.
Got it. Okay, so you can't be a home reno, a DIYer. You've got to actually have professional people that if there's anything to fall back on, like if there was ever a lawsuit, that they've got somebody to go and like try and claim money from, basically.
Absolutely. Somebody gets hurt on the job, like, somebody that's responsible, professional, that's going to get it done. But I mean, they don't have to have $10 million in projects either. So don't let it discourage you. Worst case scenario is we fill out the application, license bonded information. They do a soft credit pull on these people, check on the business, and and it's not that big of a deal, really.
Do they have to have a certain amount of insurance policy? Is that any sort of requirement? Are you aware of anything like that?
The answer probably is yes.
Okay.
To what amount, I'm not sure. I don't think it's anything more than anything crazy that any but a person would
If you're in
have.
business, right? If you're in
Yeah, if
business, you
you're
probably have a minimum policy. Yeah, I don't, not
yeah,
an insurance person, so.
yeah, I wipe my hands of that as well. I don't
Right.
like, but I'm sure there's some minimum, but it's an industry standard of a minimum, I'm sure. Nothing
Okay.
crazy. You don't have to have like, because I'm doing Fannie Freddie loans, I have to have all this extra stuff. That's not the case.
Right, right. Okay.
So
And then another thing I could see really running into problems with timelines is when you're going through a permitting process and you have to have the inspectors come back and like sign off on your electrical or sign off on your plumbing. And if they're really backed up, I feel that that could be part of the obstacle of getting your job done on time. So it's always good to add in a little bit more time, I think, to for occurrences such as that.
yeah, and that's what kind of Evan was saying when he said they always go over because things happen, right? It's
Right.
you got a lot of moving parts, a lot of third parties working on things, doing things. Things happen, and it's not that big of a deal though. But it's way easier. Like people in my position avoid these like the plague. Like even when I started, they're like, "You don't want to do construction and renovation loans. It's a pain in the rear." We
Hmm.
are really good at them. I've done quite a few of them, and it's easy. Maybe it's a pain in the rear for them, but it's not a pain in the rear for us. Like I don't mind
Right.
at all. It was easy.
Well, and I think that considering our market is changing a little bit, right? Like with interest rates being higher, I feel like buyers are taking their time when it comes to buying a home. It's not like it was, a few years ago where you saw the house and you wrote an offer that night and you were trying to get into contract as soon as you possibly could because there was a line out the door of the people of other people trying to do the same thing. And so that's where I think it's fun to talk about this is because this is an opportunity where if things aren't moving so quickly and you have a chance to identify a home, maybe it's not exactly what you want, but it could be. And then you've got the time to get the contractor in order and go through these steps.
Yeah,
So from beginning to getting approved, like how long do you think that process is? Like if I identified a home and we had to go ahead and get the contractor started to where we were actually like good to go. What kind of timeline are we looking at for something like that?
I mean, longer, right? Because it's beyond I mean,
Not
there's some
two
places
days
that, yeah,
or a
not two
day.
days, but like a 30-day close is not a big deal.
But
Like,
I
as long
mean, I mean more like from by the time you start looking at the loan process to where you can achieve it. Like, is it like a week or two? Not necessarily closing timeline, just like
oh,
green light of like, okay, this is going to work. We want to go forward.
pretty quick. I mean, the reality is you just have to have contractors, right? Which,
Okay,
I mean, that takes a little longer to get a contractor. You
right,
have to have them come and bid out what you need done, and you don't want to shortchange yourself on the bid, right? So you want to make sure if you're getting it done, you're getting it all done.
right.
And then other than that, like really not much more to it. We do
Okay.
our job and make sure that it's going to pencil out,
What
which
about the appraiser? You've got that appraiser piece in there too. Do you know how long it usually takes them to come back?
pretty standard, like a standard appraisal. I mean, they'll
Okay.
just go subject to, instead of finding a 3 bedroom comp, they're going to go find 4 bedroom comps or whatever
Got
comps
it.
that are more likely or that are more in line with what your final project's going to be. But that's not a big deal for appraisers either. So it's not like adding a whole bunch to it. It's really simple. And I mean, with the amount of inventory, I know inventory's low. We've seen some more come on there.
Mhm.
This is a great opportunity for you to get out there and, make something your own.
Right. Well, I think it's just a matter of unlocking opportunities, like
Yeah.
starting to get creative and just think outside the box a little bit. So now it makes sense to me. My apologies, because you're saying that the appraisal process is part of the closing. There's not anything that you have to do before you get that green light. It's literally just part of the normal loan process. There's just a few extra steps involved. So maybe you might want to add maybe do a 45-day close if you needed to get a
Yeah.
little bit of
Yeah.
time. Okay.
Communicate with the sellers like, here's what we're doing, a renovation loan. Give us some grace here. We got to get these
Mhm.
people out here. I mean, we've seen them in 30 days, no problem too. So it just depends
Okay.
if you want to get your ducks in a row. If this is something you're looking at, like before we get into contract, maybe having some people that you already have things lined up, being a little prepared. We've had it
Right.
the opposite though too. We've had some of these. I was talking to Evan again today about this specifically, and he's like, "Yeah, we've had them people just kind of wing it. All of a sudden decide they want to do this, and we can get this stuff done actually pretty quickly." So, think normal loan, normal close, really just with a few extra steps. And then obviously where it gets different is the back end of all the work, right?
Right. Which is what you take care of.
Yeah. I mean, you don't have to do anything. We're doing that whole thing.
Right.
Yeah. And then another thing that I thought was crazy is you can actually finance mortgage payments up to 6 months into these, which
Oh,
is,
really?
yeah. So you have no mortgage payment up to 6 months. Obviously, that would reduce the amount it's coming out of the renovation budget, right?
Right.
Still got to pencil out. But, if people are worried about, oh man, how am I going to make that payment and, my current rent or whatever, you can actually add that. We can actually budget for that within, and if it's nothing crazy, you could have it done in 6 months, you know.
Right. Gosh,
Um,
I'm just starting to think about clients that we're working with that this might be a good fit for. I can't help but just start to be like, oh my gosh, I want to talk to so and so about this. So,
Yeah, I mean, it's a great opportunity. And then also to clarify too, the 3 to 5% down is based on total acquisition cost. So just FYI, total acquisition cost is the purchase price plus renovation.
okay.
So if you're wondering where do we get the 3 to 5% from, it's from the total acquisition cost,
Okay.
which is not a big deal because I mean that's what you're going to end up with is this big beautiful home that you wanted to be. It's all your design, all your everything. So.
Right. And then what are the interest rates on these traditionally?
Usually like a quarter to half higher than market, because
Okay.
there is risk involved, right? As
Right.
us putting our name out there and, we're relying on third parties. So it's going to be higher than market. But I mean, considering you're going to do a renovation, I mean, you're going to be building some equity in your house too. You know what I mean?
Right.
So it's an opportunity for sure. And you're going to refinance in the next couple of years anyways. A quarter to half is not crazy.
Well, and especially if you're going to plan, everybody's kind of sitting in this high spot right now with their interest rates. If you plan to do a refinance, like when it's more attractive and it makes sense and it pays for itself, then we're
Absolutely.
all going to be doing it. You're going to get busier.
Yeah, and what would you pay for that house like when it was done? I would say, you know
Right.
what I mean? Like what would be if you went and they put that into market, especially now with multiple, I don't know, correct me if I'm wrong, Carrie, but it feels like if your home is like done well, it's multiple offers. If it's priced well, it's multiple offers. So if you had a home that was crispy clean, renovation, put on the marketplace, I wouldn't be crazy if there was three, four, five, six bidders on there, you
Potentially, yeah. I mean,
potentially, and now get,
the hot properties,
yeah.
like it just depends on the house specifically and area, but generally if it's a nice single family home in a
Mhm.
nice desirable area and it's been done really well, you're going to have more than one offer.
Yeah.
Single family homes, I feel, especially with what, Seattle area, King County is doing specifically a little bit down here in Tacoma, where they're doing the cottages and they're
Mhm.
doing all these houses and it might be good for first time home buyers, but people that have a family don't necessarily want to be sharing their yard with an ADU. So I think that, or dadu, I should say, the detached ADU. But
Yeah.
I think so. I feel like these single family homes that people have that have not that have a yard that's intact for their family, I think that those properties are going to end up being worth more later. So,
Yeah, so if you're out there and you find a home that's like you just need some work, and there's a lot of them because, not a lot of people in our position are out presenting this to customers and are willing to do it,
right,
as far as a lender's concerned. And I'd be happy to put numbers together for people if you want to go out there and you want to find yourself, find a little gem, you know what I mean? There's a lot of stuff that just needs a lot of work that's just sitting there, I'm sure.
right.
So,
Well, and I think people, especially if you haven't done this before and you're a first time home buyer, I make a joke, you either have a hammer or you have a checkbook. And most people don't have the hammer, they've got the checkbook. And if this is an opportunity to get you into a home that might need a hammer, but you can use your checkbook in order to get it up to par and really make it appreciate faster. It's a window into getting people into something that they're going to be excited about, that they're going to be live in, and maybe they'll live in it a little bit longer too because they will have invested their own wants and needs into it as well. So,
yeah, maybe a way to skip that first home that, your the bridge home, right? You go
right.
straight into the second home because We always tell people when you buy your first home, it's usually not your forever home. And sometimes people get ahead of themselves and they have this grandiose idea where it's like, how about just stop the bleeding on rent that you're losing at 25 grand a year and, homes appreciating at 6%, 500,000, 35 grand. I mean, you're in the whole 50 grand a year just from renting that you're leaving 50 grand behind. So like fine, just get into something and then guess what? You can rent it out. It'll appreciate. The world's your oyster as
You
soon
have
as you stop the
options.
bleeding. You have options,
You have
right?
options, right? You're not
Yeah.
stuck in like one thing. You can make decisions based on what your abilities are.
And you're not writing your biggest check to line some landlord's pockets. Like I love being a landlord myself, but on the flip side, like I love to make people homeowners and help their family get generationally wealthier.
Right. Me too. It's exciting. Well, I love that. That's good. I know that we've kind of got to kind of wrap it up for today because of just time restraints, but I love this topic and I'm so glad that we're putting it out there for people. So anybody out there, if you've been thinking about, buying a house, of course, call me, Kari Rae Davis, 206-330-6985.
Or you can get me, Keelan Harvey, at 206-321-4941.
So if anybody's got any other ideas or topics that they love to talk about, please go ahead and comment below. Have a good weekend.
Hey, everybody.
Bye.